No surprise there. But the survey results may be in just how many are saying that. Seth Marin, CEO of LiquidNet, and he joins us now. Seth, we know that so many people out there say HFT, high-frequency trading, is crushing them. But your results are even more astounding than I would have thought. Everybody says it impacts them in some way. What, only 3% said it didn't?
Well, yeah, this was the first survey of its kind, and this was done across asset managers around the world. And you're talking about 2/3 of all of the institutional traders now being very concerned or somewhat concerned about high-frequency trading. And the survey was done before all the volatility in August.
Okay, so if everyone's so concerned, and obviously it's not just here, it's all around the world, why isn't anything done about it?
Well, it's a very difficult thing to do something about. The regulators all over the world are considering options as to what to do with it. But high-frequency trading, as it stands now, first of all, it's not all bad. And second of all, it's not illegal or immoral. It's just a whole new class.
It's not all bad, but why are people so concerned about it?
Because there's a new strategy called a momentum strategy that now is probably the majority of high-frequency trading that simply senses when institutions have to buy and sell, and they trade ahead of that institution, which ultimately creates a tax on everybody's returns who invests in the pension funds and the mutual funds.
So basically, Seth, so essentially it's made a mockery of true investing as we know it, according to these investors who are not part of high-frequency trading and therefore can't participate, and they're sort of like crying about it.
Well, that's correct. For the first time, the volume on the exchanges used to be comprised totally of retail investors and institutional investors. Now you have a majority of the volume that is completely agnostic of all fundamentals of the companies. They don't care what the price is. They don't care what the management is. And that has tremendous effects on the stock prices. And you can see that it's because of that it exacerbates the volatility in the markets, because they simply don't care what the prices are.
Did you guys even ask anything about ETFs in here? Because, people want to downplay the impact of the double and triple leveraged ETFs on the upside and the downside, by the way, and all this stuff. Was there any mention of that?
We did not ask that question, but I'm sure that there are similar concerns along those lines. But what the head traders are saying is that they feel the effects of these high-frequency traders every single order that they put into the markets. For the ETFs, it's a couple of steps abstractly removed from their workflow.
And I also noticed that overall, when you were actually asking these guys, what are your top market concerns, that high-frequency trading only came in at number 3.
That's correct. But if you stack it all together, it's high-frequency trading, it's transaction costs, and it's leakage. Now, all of those are actually linked, because high-frequency trading, well, it is the order size that the institutions have that creates the leakage that the high-frequency traders use to start pushing ahead of them in the queue and moving the market up, which impacts costs.
And all those things you mentioned are things that just tick off mom and pop and eliminate them from being able to participate fairly in the stock market, are they not?
That's absolutely correct. And what mom and pop really need is a safe and efficient market that they can trust and believe in, and not have to worry about some other constituents that...
But is that gone? Is that well and truly, are we well past that stage, Seth?
Well, the institutional asset managers, they're all big boys and girls. They're all sophisticated investors. It's truly incumbent upon them to preserve and protect the investments of their investors, the information in their orders. And now there is an alternative, and that is the LiquidNet institutional marketplace. And any order that was done in the LiquidNet marketplace is an order that takes away from the triggers and the signals that high-frequency traders use to push the stock against them. So it's up to them to protect that information. And I wouldn't rely on the regulators to come to our rescue in a timely manner, because, quite frankly, there's so much money in this game that whatever the regulators put into effect, that high-frequency trading constituency will find somewhere around very shortly thereafter.
Thank you so much for that, Seth. What do you reckon, Herb? What's going to make mom and pop feel more confident about coming back to this market?
I think mom and pop are going to have a hard time coming back to this market. It seems so stacked against them.
It's not a level playing field.
Well, it doesn't feel that way, and they certainly don't see it that way. And every time we talk about this, and he talks about these momentum trades and the algorithms, how do you get in there? That said, there are those who think that there's an opportunity out there. I do want to say anyone dealing with high-frequency trading will come back and say that there is It does just the opposite, increases liquidity. That's always been the defense from the other side, just to point out that there is another side to this story.
Okay, thank you.